I'm Owen Bigland. This is the Inside Edge video blog. Okay, summer 2021. I want to give you guys an update on the current status of the Vancouver pre-sale market, because I always get a lot of people ask me about pre-sales, and I'm always getting emails from people saying, hey, Owen, I want to buy a condo, want to buy an investment unit, can you represent me? And maybe I'm thinking about buying a pre-sale. Well, as you guys know, I've blogged about this for a long time. I am not all that bullish on pre-sale. And I haven't been for a long time. Pre-sale used to make a lot more sense back 10, 15, 18 years ago. I blogged about this. Back then, I think people would be shocked at what the pre-sale market was back, let's call it 12 or 13 years ago, because I used to buy pre-sale. I used to sell a lot of pre-sale, and I bought pre-sale myself. Back 12, 13 years ago, you actually got an incentive to buy pre-sale. You could buy it cheaper than what tangible product was. I know that that's a shock to a lot of young people. Now, of course, it's all flipped. You are paying a huge premium now, and have for many, many years. Probably 8 years, 9 years ago was when the script flipped. You're paying a premium now and then some for that layaway program. Plus add the GST, plus, which I'm going to talk about in a minute, what I call the double dipping on GST, which I am seeing so many horror stories right now about what I'm calling the double dip on GST and unsuspecting sellers, buyers, and their realtors. So there was a couple of articles recently here that just came out this summer that the pre-sale market, of course, for downtown Vancouver and kind of surrounding areas has been pretty dead here for a while. Since 2017. As a matter of fact, the last successful pre-sale for downtown Vancouver was the Butterfly, which was in 2017 over at Nelson and Burrard. That was a very successful project that sold out at very high prices, because that's a luxury building. Since then, until recently, not much has happened. There was the Landmark on Robson Street tried to do a pre-sale in early 2018, but it was a flop. It never went anywhere. It lasted about 2 or 3 months. I think the demand was underwhelming, and they canceled it. And part of the reason for that, market wasn't that great. It was okay. I think one of the catalysts for that, we had the BC speculation tax, of course, empty homes tax going on. The NDP was voted in and around that time. Once NDP gets into power, I can tell you, I've blogged about this many times, your outlook on things business-wise usually drops dramatically when you get a socialist government in place. So I think there was a lot of catalysts there. But just last week, they just did announce a new pre-sale that went on sale last month. This is Jim Pattison's development, and it's Burrard Place 2. Now, they sold Burrard Place 1 probably about 4 years ago, very successful. They're just getting ready to probably get occupancy on that building in the next 6 to 8 months, I would say. So now they just launched Burrard Place 2, and they sold 100 units in the first 2 days with that pre-sale a couple weeks ago. We're talking around $1,800 to $1,900 a square foot. And up, there are some higher floor units in there that are well over $2,000 a square foot. So not cheap. Plus to add the fact that you've got GST on that. So this might be a harbinger for things to come. There are a lot of developments in downtown Vancouver now that have been zoned, in the West End especially, that have been kind of on a holding pattern for the last couple of years. But keep in mind, pre-sales, in my opinion, what's out there right now and what I can see that's coming doesn't offer a whole lot of compelling value for me. They're extremely expensive, and that's why I've been telling people to get a piece, and especially a lot of my investor clients, get a piece of downtown Vancouver while the getting's good. We can still get good quality, younger, concrete stratas downtown for $1,100, $1,150, $1,200 a square foot all day. Everything coming online here is going to be $18, $19, well over $2,500 a square foot for some of the stuff in Cole Harbour. So, and add GST to that as well. These are extremely expensive. The other thing, of course, we're talking 3-4 year time frames from the time you put down your first deposit until the time you get your keys. And a lot of things can happen in that time. You get transferred, you lose your job, you get a divorce. Of course, you're not going to be locking in any mortgage rates. You're not going to be getting advantage of the 1.7 or 1.8. You're going to have to get that mortgage in 4 or 5 years, and who knows what the rates are going to be like then. They could be at 3 or 3.5% for all we know. So, a lot of people don't realize if you're going to buy a pre-sale, boy, you better have a long-term commitment to that unit. And it can make sense for some people. I haven't sold any pre-sale this year, probably because there's almost none in Vancouver anyways, until this Burrard place too. I sold 2 last year. They made sense for my buyers. Both were out in the Brentwood and Metrotown area. They wanted to be out there, and I think we got them at a pretty fair price. As of today, looking at the market now, they're probably up on these units a little bit. But they wanted to be in those buildings. Both my buyers were living at home still, weren't paying rent, so it was a pretty decent fit for them. But for a lot of people, and especially investors, in my opinion, you are far better off going with tangible product. It doesn't have to be old either. If you want something relatively new, we can get you a 1 or 2 or 3 year old tangible condo, no GST, at $400 or $500 or $600 less per square foot, less than what you're getting for a pre-sale with all those unknowns. So you need to be careful with pre-sale. A few things that are in the news lately. There was some pre-sale that was done out by the Joyce SkyTrain station. I think it was a West Bank project. Those are coming online now. And those people paid something in the neighborhood of about $1,300 a square foot. Now you're seeing some people that are selling these. Now, some of them, I don't know what their circumstances are. I hope they weren't flippers or investors buying pre-sale and then thinking you're going to make money after you complete on it and trying to flip them, because the chances of you making money on these are very slim, super risky. Don't go near that. What usually happens with these sales is a change of circumstance. And I'll give you an example from one that I'm going to have here coming up. But usually, they bought it 3 and 4 years ago and their circumstances have changed. They're divorced now. He's got a job transfer. Whatever, can't get the mortgage in some cases, or having problems qualifying now that it's complete, and they've got to sell them as either as an assignment, or you got to take possession on it and sell it as a tangible product. They're going to be taking losses from what I can see on these Joyce ones. They're asking, I saw one that hit the MLS here, it's 860 square feet with a large deck for $1,380,000. And keep in mind here, folks, there's GST on that. So let's just get into that quickly. That seller now has taken the keys on it and he's selling it now as a tangible unit, which is the way to go, because trying to sell as an assignment is incredibly difficult. I'll have to do another blog on this about all the hurdles. You can't put it on the MLS usually. The developer will restrict you what you can do with it. You've got to pay an assignment fee to the developer, which you never had to do before. Those were the glory days of pre-sale. You got a deal on it, no assignment fees, you could flip it on the MLS, and you were getting it below market. Now you're paying way above market tangible product for it. You've got the GST, and the developer is going to restrict you on trying to sell it as an assignment. So you've got to close on this. You pay the 5% GST. Now if you put that back on the MLS and try and sell it, you have people, I don't think a lot of people realize this, there is a second set of GST. That buyer, that seller I should say, has to live in that home for at least 1 full year as their principal residence. Then after a year, they could sell it as long as they've lived in it, and you should be okay with the GST again. But consult your accountant on this. But if they're selling this, they haven't even moved into it, and they're selling it, there's a second set of GST there. So either the buyer is going to have to pay the GST, so they're asking $1,380,000 for this thing, plus GST. Somebody is going to eat the GST, and this is why you better hire an experienced realtor when you're listing these type of things, or you're buying these. When I'm buying a unit that's less than a year old, I'm going to write in the contract of purchase and sale that this is inclusive of GST. Now, I can tell you, I've had situations where I've written that in, the seller has agreed to it because he thinks, hey, I'm in the clear, I've already paid the GST. But in some cases, you're not. You can get audited on this by Revenue Canada. They're going to come back and they're usually going to go after the buyer first. You're going to get a letter and saying, hey, you bought this condo. It was 6 weeks old when you bought it. You owe us 5% GST. You're going to be able to say, if your realtor's done the right job for you, you're going to say, well, I negotiated that into the contract. It was inclusive of GST. They're going to say, send the contract. They're going to pull the contract. They're going to see that it was inclusive of GST. Guess what? They're going to go back to the seller again. Can you imagine? The seller's going to get a letter in the mail saying you owe us $60,000 in GST. He's going to say, I already paid the GST. You owe us $60,000 again because you sold it. You did not live in it for at least a full year. So you've got to be careful. When I'm listing these, and I do list these, so it's negotiable. We're either going to pad it into our price, but somebody's got to pay it. Either the seller again or the buyer. It depends on the contract. So I'll give you one that I'm getting ready to list. First off, these people out in Joyce, they're all going to, anyone that has to sell, and if you're selling, they're obviously forced to sell for some reasons. They're going to take a loss. I've got one I'm getting ready to list. It's 2nd in Main here. That development is getting ready for occupancy here in the next month or so. I've got a client that's got a 2-bed, 2-bath. I did not sell this unit to these clients. It's a change of circumstance. They bought this unit for their daughter. She was going to move into it. She's now taken a job in the Okanagan and is not going to be living in Vancouver. It's too good to rent. They don't really want to hold the property, so we're going to have to sell it. So I'm going to list it. They're going to pay the GST on it, and we'll have to negotiate the second set of GST. But it's not going to be an easy sale because, again, we're looking at $1,300 a square foot they paid for this, plus another set of GST. Plus, I'm competing against the developer who also held back units and has got, 10, 15, 20 units that he's got on the MLS that they held back, which is often the case. Plus, there's going to be other people in that circumstance as well that bought it 4 years ago. Their circumstances have changed, and now I got to sell it. So there's a lot of competition in there. So be careful with pre-sales. It can make sense for some people, but when you're paying $2,000 a square foot plus GST, it better be a special unit in a special building that can't be duplicated in the tangible market. And in some cases, there are some of those. There's going to be some incredible buildings going up, architecturally significant buildings going up in Cole Harbour and in the West End. Maybe they make sense for the right buyer. Unobstructed water and mountain views, English Bay views. For the right buyer, sure. And the right buyer being that it's going to be their dream home. They're going to buy it. They'll pay the GST, but they're going to keep it for 10 or 15 or 20 years because that's what you've got to do. The friction costs, as I say, with real estate are incredibly high. You've got the PTT going in and the GST. And then if you have to sell it in quick order, another set of GST, 5%, your conveyancing costs and everything else. So be careful with pre-sale. For the most part, they're expensive. I think there's better value in the tangible market that you can open the cabinets, look at the parking space, have a look at the amenities. You can't do that with pre-sale. And pre-sale, things can change. What you're buying on the brochure isn't necessarily what you're going to get in the finished product. The developer has every single angle covered in there on changing things around. You have no recourse for that. You also, what we call the estimated completion dates, those can be way off. They have what's called a drop dead date in there. They might tell you that you buy today and you're going to move in 2025. But, that's if everything goes perfect, which it seldom does. It could be another 18 months beyond that. So they are starting to sell. They did have a successful launch here finally, the first one since 2017 on Burrard Place 2. But other than that, not a whole lot of pre-sale. There's a bunch of projects that might be coming up here. Pretty expensive. If you're an investor, I would steer you into tangible product all day long. I can get you a better deal. We can negotiate the price and no GST, and we know what we're buying. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.